The traditional wealth management industry charges millions of people a 1% assets under management fee every single year. For $1 million portfolio, that is $10,000 paid out for what is essentially a set of mechanical rules. A massive justification for this fee is the promise that they will manage and rebalance your portfolio for you. They claim to optimize your risk and return by keeping your asset classes in check. Today, we are going to write a 40-line Python script that does this exact job for free in less than 2 seconds. We are taking the black box of wealth management and turning it into transparent, executable code. Welcome back to Syntax Finance. I'm your host, and in this build, we are deconstructing asset allocation. We aren't just talking about theory. We are building the engine that keeps your portfolio honest. We'll start with the math behind portfolio drift, why it happens, and why it's dangerous. Then, we'll dive into the logic of threshold rebalancing, and finally, we will write the script to automate your buy and sell orders. Let's assume your risk tolerance dictates an 80-20 portfolio. That is 80% in a broad market ETF like the S&P 500 and 20% in long-term government treasuries. This is your target allocation, your risk baseline. During a multi-year bull market, your stocks will inevitably grow much faster than your bonds. If you do nothing, your 80-20 portfolio drifts. Without you ever touching it, your portfolio has evolved into a 95-5 allocation. You haven't actively changed your strategy, but the market has drastically altered your risk profile. You are now significantly more exposed to a crash than you intended to be. If the market drops 30% tomorrow, you will lose far more than your system was designed to handle. Rebalancing is the mechanical act of selling what has gone up and buying what has gone down. It forces you to take profits from winners and buy undervalued assets, removing all emotional friction from the process. It is the ultimate buy low, sell high machine. But when should you rebalance? Many people do it by time, say, every January 1st. But a superior algorithmic approach is threshold rebalancing. We don't act because the calendar says so, we act because the math says so. We program a simple rule. If any asset drifts more than 5% absolute from its target, trigger a rebalancing event. This prevents overtrading and minimizes tax drag, ensuring you only pay capital gains when it is mathematically necessary. Now, let's build the engine. The inputs for our script are simple. We start with a CSV file containing our tickers, the number of shares we own, and our target weights. This is our source of truth. We'll use 2 primary tools, Pandas for data manipulation and Yai Finance to fetch live market data. First, we load our CSV into a data frame and ping the Yahoo Finance API for the current price of every asset in our list. With the live prices fetched, we calculate the total value of our portfolio. This number, $142,000 in this example, is the anchor for all our subsequent calculations. To find out exactly what to buy or sell, we take that total value and multiply it by our target weights. This tells us precisely how many dollars we should times have in each asset class to maintain our 80/20 balance. Target value minus current value gives us our delta. A positive delta means you are underweight and need to buy. A negative delta means you are overweight and need to sell. Automating this step eliminates the gut feeling that often leads to poor trading decisions. Finally, we apply our 5% threshold. The script checks the drift. If the math doesn't mandate a change, the script terminates. If a threshold is breached, it prints our exact execution orders, exactly what to buy and what to sell. Asset allocation should not be a guessing game. By defining your targets and running this script, you remove the psychological friction of portfolio management. You aren't reacting to news, you are following a system. As always, the code we wrote today is completely open source. The link to the repository is in the description. Fork it, plug in your own tickers, and start automating your wealth management today. If you found this build valuable and want to continue deconstructing financial systems with code, hit subscribe. We have a lot more systems to build. See you in the next run.